Welcome everyone to the Kendall Report. It is Tuesday night. Tomorrow's the big day. We got inflation coming out and lots of expectations out there. Before I get into tonight's video, make sure you subscribe, like these videos, and make sure you hit the notification bell so you'll know when I come live. Well, folks, yesterday was interesting. We had this sharp sell-off right at the end of the session. And I think as it's going to turn out, that was the opportunity when we traded down to 38.06, I believe was the intraday low on the futures. That was an opportunity to get, to probably buy. And I'll explain what I think is going on here. And I'm sticking with my analysis I've been talking about is that we're going to pop out of here. You'll see in the technicals in a few minutes, the PPMs are really starting to reveal themselves, and that'll be an interesting conversation. Yesterday we had S&P down 0.92, Nasdaq down 0.95, and Russell down 0.22. And really what we've been in, and I talked about this last night, is this just sideways consolidation phase. There's not really been, we've just been erratic back and forth in a range. And I think that will begin to change possibly tomorrow. CPI, I think, is going to come out as expected, or maybe even a little surprise. It won't come in hotter than expected. Everybody is expecting it to be hotter. And so I would be willing to bet there's a whole lot of folks that were liquidating ahead and maybe even getting short ahead of this report. So we could see a pretty interesting opening. Of course, this is going to come out an hour before the opening. So we're going to have market moving activity an hour before the open. So I'm hoping to be there to participate in that activity. Just a couple things here on the CPI. It's expected to come in at 1.1. Last month it was 1.0 month over month. Year over year last month was 8.6. They're looking at 8.8. So it, like I said, I think there's probably a little bit of a surprise here, and I'm basing this upon something that I often talk about is a reverse fundamental. So I'm looking at the charts, they're telling me something, what could make that happen? And the only thing for Wednesday, it will be that there's a surprise of some sort, or the market will interpret something. You know, I think for 3 months now, the conversation out there has been that inflation is peaking, right? Or, you know, it goes back to transitory and then it wasn't. Now it's peaking. I think this is the third month in a row that people are talking about it peaking. But I think there's something interesting going on. And the title of this video tonight is Oil Signals of Recession. And crude oil all of a sudden is getting very weak. You'll see on the weekly charts, there's still support in prices, not too far from where we're trading, but the patterns have been broken. There's going to be, I think, a lot more activity on the downside. And while it might be limited, I think we just get into a consolidation phase. We could see $82 a barrel, and I'll go through that in a few minutes. So just looking at my notes here, the other thing that I do want to just kind of talk a little bit more about is that on this oil patch, the whole oil scenario, I showed you the XLE hack, and I think these oil stocks, be really careful, because I still see a lot of these folks running around the street. You watch Bloomberg and early in the morning, you'll hear a lot of these people talking about, well, we still like the energy stocks. So you know there's a lot more on the downside here, and there's just not, if nothing else, it's not going to bounce very much. So be really cautious in that sector. So just I think one other interpretation of what's going on in oil, not only is it signaling a recession, but I think it's also going to be the dialogue behind the inflation starting to stall or flattening, at least flattening and maybe turning down. That will be the story. If oil stays down, they're going to use that story. The oggles are going to definitely pump that up. And we'll watch how that unfolds over the next several days. Tomorrow's going to be an interesting day. Those of you in the live trading room, we'll be going through that in detail tomorrow as it happens. So there's going to be lots of activity for sure. Let's go ahead and take a look at the database and see what's going on there. So we flattened out just a little bit here in the Wavetech database. We got to the 52.52. Yesterday we were 53.02, so very little downtick. We had 760 sells, 760 sells and 625 sells. So we got just a little bit of a downtick here, and that looks like we're going to get probably some stability here. And this is one of the other things that is leading me to believe that things are maybe a little better than a lot of folks believe. And I think this is the edge that I have in looking at the world. I'm following 16,141 symbols, and I can see the world at a much different level, because what these buying that we are seeing, like we have 8,478 symbols long right now. What that tells us, there's half of the market is trending on a short-term level to the upside. And we saw very little buying on the intermediates last Friday, but I think this Friday is going to be much different. All we have to do is stay stable for another week, and we're going to come into next week looking a lot better than we do right now. I certainly am not in the camp that the markets are going to make an all-time new high, but I've been talking about this scenario for a while here, that I think that the third quarter is going to be a rebound quarter after the first half of the year, and I don't think it's going to be up much more than maybe 43. We could see a 45 print on the S&P, but we've got a lot we'll be able to figure that out long before we get there. Let's go ahead and take a look at the technicals. Okay, folks, this is the S&P. We're flat on the evening. We traded down yesterday. I do have everything working properly tonight. I apologize for last night. So yesterday we printed down to 3804.75, and we bounced off of that level, and we were down about 1.15%, I think, at that point. And we did bounce back just a bit to be under 1% down. But this pattern I've been talking about, if you look at the PPMs here, you see PPM 2 is just accelerating, and that's right where the support is right now. And I'll show you this here right now. Is 3814 is the 21 period moving average. It is now already turned up. It was still down decent numbers just a couple days ago. And I told you this was what I was looking for this to turn up. And also last night I discussed that the key number was going to be that around right here at this level, 18, I'm sorry, not 18, but 3811 to 3808. If we close below 38 handle, that would have been disaster. But for whatever reason, these markets just basically go all the way to the extremes of what is okay. And this is exactly what happened. So we're trading not far off of that 38.2650. I'll show you the expectations here for the markets. It's interesting, I think, as we look into tomorrow, because we have S1 3809. We've been 18 low, so I think we'll probably bottom. We could spike below 3800 down to the S2 3794, but I would definitely be looking for probably an R2 number somewhere between 38, 37, and 53 would be minimal. And if we do get finally capitulation of this long consolidation here, and we're talking about the last 3 weeks of trading in this range I was talking about on the opening comments, I think if we get through this, we're easily going to see a couple levels here on the S&P. The first level is going to be 3915 to 3950. Still looking, that's about 125 point rally. And then from there, I think ultimately we get into these fib numbers that I've been talking about here at 4052, 4171, and 4214. And if we get there, we're probably going to be talking about the 200-day moving average, which is 4350. I mentioned this the other night, is that there's a whole lot of these stocks and symbols that are out there that are looking like they all want to go back and test the backside of the 200-day. Whether they get above that or not, that's another story. We'll look at that when we get there, if we get there. But it looks like a lot of symbols want to go back to those levels. If I were to go down a list of symbols, you'd see that. But trust me that they are out there, and that's what's going to drive these indexes higher, because a lot of those large caps look pretty good. Yesterday, the mega cap stocks were the leaders on the downside, but I'm telling you, all of these markets are starting to show the same characteristics across the board. And this is a classic point, I think, to basically catch everybody short and maybe get a big short covering rally that maybe feeds into something else. We'll see if I'm right tomorrow. Anything under 3,800 on a closing basis tomorrow would be a disaster and would set the tone. And I just want to show you something. Go back full screen for a minute. And it's one of those times we do have a downward Fibonacci target down at 3,400. So I just don't, I teach this a lot in those of you that have the indicators. I tell you this in the live room. You've heard me say this. Whenever we have projections on the upside and downside off the Fib projection tool right now. And when you have rising PPMs, you're likely to go to the upper range than the lower. And there's something else that happens with these indicators, is that if you get these big, broad targets that are almost unrealistic, they very seldom get hit. I call them island projections. They never get hit. And the key here is that all the PPMs are turning up. So to expect to see everything rotate over and go down and hit these numbers probably isn't very likely. So as I said last night, I'm sticking with this analysis that we're going to see this pattern ultimately resolve itself up into the levels that I just discussed. Okay, next market we'll cover is the Nasdaq. And Nasdaq, same configuration here. PPM2 is accelerating here. It is actually turned positive by a fair amount. It's up 0.19. I hate to keep mentioning this, it happens every night, but the profile on the Nasdaq is a bit stronger than on the S&P, so it just seems to work that way. I don't know if it might be just due to the higher volatility that this index has relative to the S&P. That may be part of it, but this is definitely set in the same scenario. And I didn't mention this on the S&P, but the target is going to be, the minimum target right here is going to be the 40 period moving average. 11,986 is that magic number. If you do a simple average on the S&P, I believe it's 3915 is where that number is right now. And so this is going to be the initial target. And then if we should see momentum start to build from there and be able to get some follow through as we go through the next, I'm going to call it the next maybe 5 to 8 trading sessions. So this should be a strong move, fairly quick, but I think it'll take at least, it is coming into Wednesday. It should follow through into early next week, I would suspect, from that standpoint. So look at this pattern here. So as far as the range for today, we're looking at probably S1, R2. That's 710 downside. So far, we've had a 761. So there could be a little more downside. Absolute, if you get anything close to S1, you can buy this thing. And on the upside, 1194, 12,000. You can see we're right there at 924 to 12,000 is R2, R3 on the upside. So it looks to me that everything is set. I even like how the position of the Wavetech 200 down at the bottom is. And those of you that have the indicators, you know some of the experience with this stuff when you start to see all of these indicators start to expand or turn up like this. They're pretty accurate in signaling that market is going to at least go in that direction, whether it's 3 to 5 bars, sometimes it's more, and those numbers will evolve. Okay, we'll go to the RTY and look at the Russell futures. Russell futures are flat on the night. They have, all of these things, all these indexes look the same as a profile. The numbers are slightly different, but the profile is very similar, where you see PPM2 accelerating big through its first, second derivative, and then you see the PPM1 turning up, but not quite through its first for our second derivative here. But it's definitely looking like we're going to see some acceleration on this as well. The target zone is the same. The 40 period moving average, 1774, and then the fib target numbers on the upside come in. You'll see them here on the pop-up. High target 1, 1834, 1893, and 1930. Next, we'll look at the interest rates, and I'm going to cover the Dow again. Too much going on with the Dow not to continue to follow that in this current environment. There's so much going on with the Dow, and we just have to stay with that for right now. But as we look at the treasuries, they came back in as well. I think there's a lot of things that are starting to finally come around, maybe starting to signal that there is demand destruction going on. There's other things going on that's causing a little less demand on the interest. Now, everybody's fully expecting that in a couple of weeks' time, the Fed is going to be raising rates by 0.75% again, but they are so far behind the curve that they're going to have to do that. And I think that is priced in. If you couldn't turn on a financial station without hearing that. So expect that is going to be exactly what's going to happen. They've telegraphed everything they've done since Helicopter Ben. So there's been no surprises out of the Fed for so long. I miss guys like Volcker and Greenspan. They were at least willing to shock the market here and there. Not these guys. They are absolutely going to tell everybody exactly what they're going to do and how they're going to do it. And like I've been talking about, the dog is wagging the tail again. So the markets are now telling the Fed what's going on. It's not the other way. And that's actually probably a better way to operate. The Fed always was a laggard when I started in the markets in 1979. And I think they're there again. The fact that they're behind the curve is nothing new. They're always behind the curve. But if the markets are leading the way, then we get some good dynamics, and they're much more predictable in that environment, meaning that you can see what's happening and then you know how to respond, rather than sitting around waiting for some talking head to tell you what's going to happen next. The markets always lead. They've led less in the last, we'll go 10, 15 years. We've seen very much just following as the tail is wagging the dog. So I think we're out of that environment, and the signals that we're getting out of interest rates and crude oil, which we'll cover next, are actually, I'm going to go through the Dow, but when we cover crude, they're telling the same story, and they're even starting to look the same. Let me bring up the weekly chart so you can keep that in mind when we get over to crude oil. You see this broadening top. I've been talking about this pattern on the market grid for the last several weeks, actually maybe going back about 5 weeks when we started to form this. We're now into just a huge volatility range when it comes to interest rates, but the ranges are going to be biased a little more to the downside. I don't think we get much under 270 in this pattern, and we probably hover between 270 and 3, maybe 305, something like that. I don't see us getting through a lot. I'm not going to show the yield curve tonight, but it's continuing to stay flat. The 530s and 1030s actually flattened a little bit, but nothing material. They're not inverted. I know the 210s remain inverted. I don't think that's as big as an event as they think, but we'll see what happens down the road. Okay, next is the dollar, also going to bring up the yen again. The dollar continues to be at 108. We're up just slightly on the evening, but we're just printing and maintaining these higher levels that we've been at here. The high so far, this is the weekly chart, is 108.56, and we're printing 28 last. 828 is the last trade. And, you know, it's just very firm, and there's not a lot of downside here at all. And I think, like I've been saying, we're probably going to see at least 111 plus on this market before it's done, but it's not likely to go straight up from there. As we come into the end of this week, we'll see how the market grid looks on Sunday night when we come in. And those of you who have the market grid, you'll know what it looks like because you'll have that in advance. But the basic pattern that we're seeing here is still an expansive pattern. You look at the PPMs, they're all in trend mode, 0.44, 0.57, 0.36. If you're new to the channel, these are the price pressure momentum indicators, and they give us the angle of attack of the trend. And this is 3 basic internal trend factors that are evolving all the time within the markets. So these are really important. The angle of this attack is really important from the standpoint of its longevity and the support levels that it's creating. So let's take a look at the yen. The yen remains above the 137 levels, 137.13 right now. This is the daily chart, and I still expect this to go probably up to these numbers here, 141 to 147. I believe we're going to continue. This pattern is a bullish pattern. The only thing that, let's go to the weekly that we should look at here, is this angle of attack here in a weekly. You can see this. This is going to be your primary trend line, and that is going up right now at, let me just tell you what it's going up. It is going up about 60 cents per week. So it won't take long. In about 3 weeks, we'll be around 130, 133 and a half, 134. So probably downside, if there is any minor corrections in here, would be back to there. But this is potentially, I mentioned this last night, what I call a running wave 4, where this is actually a B wave that's going on here, and a C wave would come down to about the 10 period moving average, and then you would get one more new high, and that new high would be a fairly decent number up to the targets I just talked about, 141, 145 minimum. All right, let's take a look at this crude oil market. And this is, I think, a significant pattern to keep in mind. It looked like I've been talking about staying above the 95 level. We are there right now, so we traded back down toward the bottom end of the market grid. Let me put that back over here so you can see this. The bottom end, this is a weekly chart again. 95.75 is the S3 number. We printed so far on the week 93.67. So we've been just below that. STX is 92.96. So we're trading right at that S3 number right now on a weekly. And this is the key point here that I was trying to make with you, is that this broad pattern that's up here suggests that we're going to have some tremendous amount of volatility here, and we could trade down as low as the 40-period moving average. That's 88.06. That would be an extreme right now, but let's take a look at something else before we move on. Is we have the PPMs down. PPM1 is down 0.81, and that is going to be major resistance here, 108. That number is dropping basically $1 per week. So it's going to come down 107. Very quickly, you'll be putting a cap on this market around 105, 104, and then the bottom end of this should be around 88. I mentioned the number 82. If we come over and go to one level up, go to the monthly chart, you'll see that 85 comes in over here on an STX on a monthly, but we're also trading right around the 200-month moving average, which is 92.81. So we should stabilize right in here. I think the 82 number would be down the road, and maybe we see actual real demand destruction going on. And there's just a lot of, best way to put it, there's just a lot of talk out there of finally of a recession. And I think, like I said, we really kick off earnings. I think Delta comes out tomorrow, but that's the only material. But on Thursday, we've got JP Morgan. And then on Friday, I've told you this, Friday is going to be a big day because there's a ton of banks and financial coming out to the market on Friday. So there's going to be plenty of activity for the rest of this week. So don't get bored, because I don't think you'll be able to with the volatility that's coming. Okay, I've still got the monthly chart out. It's probably appropriate that we stick with this for the moment. As I mentioned the other night, we're getting through the 40-month moving average on gold, and we're also printing down toward the extreme on gold, low 1720. If you look at the pop-up window, S3 1721, STX is 1694, and like I said, based on what's going on with the dollar, it's amazing that we're not printing down here at the 200-month moving average down at 1,500 or something ridiculous. But this trend that's in here is a secular downtrend. And the only thing holding it, this is what's going to be supportive right here. That 40-period moving average will be interesting because it has a value of 0.44 positive. And what that means is that there's only about a 40% probability that we're going to close below that at the end of this month. Now, we're just about halfway through this month, so that's a ways away, but that means that we're likely to close above 1766, last trade 25, so that'd be a $40 rally, and I'm not sure what would cause that, but maybe the dollar will back off as we come into the end of the month. But the bottom line is this market's still in a downward trend, and the overhead resistance is huge. Around 1830 is a ceiling. We're a long ways. We're 100 points from that now. So do a quick look at the weekly, and you see we're trading right on that weekly moving average now. 16, I'll get the right number. 1714 is the 200-week moving average. The low that we've been to right now is 1720, like I mentioned. So we're trading right on that 200-week moving average. And if we look at the 200, it is sloping up. So there is a angle of attack that suggests that it should hold that level. And we're just even looking at the market grid here. we're looking at S2 is 1712, S3, this is a weekly, 1696. So there's still some downside in here, but we also have a number of support levels here between some of the numbers that are on the monthly and the weekly charts. I don't think it's even worth looking at dailies at the moment. We'll start with the weekly Bitcoin. Bitcoin continues to be under the 200-week moving averages. So weekly chart here, that number is right now at 22,612. We're trading 19,502. I suspect we're going to try to trade back up here. One of the things I've been talking about is the patterns that are unfolding on the PPMs. They are very close to signaling a bit of a bottom, and we get these little, I call them bubble bottoms here, and you'll see like it's a little rounded bottom in the market grid, and we've got kind of a stair-stepping pattern that's coming in here, and the STX, or we'll call it S2, is 19,146, so we basically have been down to S2, S3, 18,413, and 17,758. I don't see us getting below that level, but I do see this market just kind of bottoming pretty close to where we are right now. And if I'm right about the indexes and the Nasdaq, that correlation there is probably going to motivate some folks to be buying some Bitcoins here. Still overall in a major downtrend, so there's nothing bullish about this, but like I mentioned last night, it's very impressive that it's been able to hold up and not just get a massive liquidation and and the prices just plummet here. And I would say that's really a credit to the Bitcoin, that it is stable enough that it's found this valuation point where there's a lot of churning going on here. That's a good sign at the moment. And unless the equity markets break down the next level and assets in general get liquidated, I don't expect to see this go much lower from here. And I think we could spend another couple weeks of consolidation. We're going to have to burn this downward pressure off on these PPMs. I mean, these are massive downtrends, but they're also at an extreme. So it's going to take 3, 4, 5 weeks, and we could trade back into, if we look at this, we could trade back toward that 22,000 level, but we're going to just continue probably consolidate. I'm going to draw a line at 18.5 to maybe 22.5. We could print a little higher, but I think that's going to be the range, and that's been the range we've been in for a number of weeks. Okay, folks, this is going to do it. Remember to go ahead and get these indicators, because I think you're going to find it real interesting. You get access to our live trading room as well, so you can come in there and spend some time with me one-on-one, basically. And it's a cool little community, so join us, get the indicators. And a lot of folks love the market grid. It's worth it for the market grid. And just for the record, you have to have TradingView to use it, right? But you can get the free version of TradingView after you buy these things, and it's a lifetime license. So once you get them, you have them. And so anyway, have a great evening. Good luck trading tomorrow. It's going to be a wild one, I think. There's going to be just plenty of volatility, especially from 5:30 on local time in Pacific, so we'll call 8:30 New York on. You better be up a little early tomorrow. All right, folks, thanks for watching. I really appreciate it. Remember to hit that like button before you leave. Don't leave here without hitting the like button, and subscribe and hit the notification bell. I'll see you tomorrow night at the same time. You're welcome, everyone. Have a great day trading.